Imagine a company that started as a struggling textile business only to evolve into one of the most powerful forces in the global economy. This isn't just any company, it's Berkshire Hathaway, a giant in the world of finance led by none other than Warren Buffett. Warren Buffett, often referred to as the Oracle of Omaha, is one of the most successful investors in history and the chairman and CEO of Berkshire Hathaway. Born on August 30th, 1930 in Omaha, Nebraska, Buffett displayed an early interest in business and investing, famously buying his first stock at the age of 11. Over the decades, he has built a reputation for his value investing approach, focusing on acquiring undervalued companies with strong fundamentals and competitive advantages. Buffett is known for his long-term investment philosophy, patience, and keen understanding of market dynamics, which have led to Berkshire Hathaway's remarkable growth. But how did it get there, and what's behind its remarkable success? Berkshire Hathaway's journey starts in 1839 as a textile manufacturing company in Rhode Island. For more than a century, it was just that, a basic run-of-the-mill textile operation. But fast forward to the 1960s and the business was struggling. That's when Warren Buffett entered the scene. Buffett didn't start out as the business genius we all know today. He was a young investor, drawn in by what he saw as a bargain in Berkshire's stock. He began buying shares, thinking he could turn the company around. But what happened next wasn't the fairy tale comeback you might expect. Berkshire's textile operations kept losing money. Here's where the genius of Buffett's strategy really begins to shine. He didn't try to revive the dying textile business, he pivoted. Instead, he used Berkshire Hathaway's structure as a holding company to invest in other, more profitable businesses. Berkshire Hathaway started acquiring insurance companies, which became the core of its empire. Why insurance? It's simple: cash flow. Insurance companies receive premiums up front and only pay out claims later, giving Buffett what's called float, a constant stream of capital he could use to make even more investments. This strategy wasn't just brilliant, it was revolutionary. While most companies were focused on growing their own operations, Buffett turned Berkshire Hathaway into a cash-generating machine that could buy whatever it wanted. And boy, did it buy. Berkshire's portfolio exploded with acquisitions across a wide range of industries: candy with See's Candies, railroads with BNSF, furniture with Nebraska Furniture Mart, and even utilities through Berkshire Hathaway Energy. You name it, Berkshire probably owns it. But this wasn't just about buying businesses for the sake of buying. Each acquisition was part of a larger strategy diversification. By owning companies in different industries, Berkshire Hathaway became more resilient. When one sector struggled, another would thrive. It's the ultimate safety net in the business world. And then, of course, there's the stock portfolio. Buffett is known as one of the greatest investors of all time, and Berkshire's stock picks are legendary. Coca-Cola, Apple, American Express, Bank of America. Berkshire has massive stakes in some of the world's biggest companies. Buffett's investment philosophy is simple but profound. Buy great businesses at fair prices and hold on to them for the long term. Patience is key. Berkshire doesn't jump in and out of stocks chasing quick gains. Instead, Buffett looks for companies with strong brands, loyal customers, and consistent earnings. Then he sits back and lets compounding do the work, and it's paid off. Berkshire Hathaway's stock price has grown more than 3 million% since Buffett took control. Yes, you heard that right, 3 million%. But it's not just about picking stocks, it's about understanding the value of patience and discipline. Now let's take a look inside the company itself. One of Berkshire Hathaway's biggest strengths is its culture. Buffett is famous for giving his managers complete autonomy. He doesn't micromanage, he lets them run their businesses while focusing on capital allocation. This decentralized approach has attracted top talent to Berkshire's subsidiaries. Managers love working there because they get to focus on what they do best without interference. And that's another secret to Berkshire's success. It invests in people as much as it invests in companies. Now, let's talk about the numbers. Berkshire Hathaway is one of the most financially secure companies in the world. With over $140 billion in cash reserves, it's what investors call a fortress balance sheet. This gives Berkshire the flexibility to make huge acquisitions or weather financial storms without breaking a sweat. And in times of crisis, like the 2008 financial meltdown or the COVID-19 pandemic, that cash allowed Berkshire to step in and make opportunistic investments. While other companies were panicking, Buffett was buying. Let's dive into the investment portfolio of Warren Buffett, specifically focusing on his top 5 holdings that showcase the essence of his investment philosophy. As we know, Buffett is not just a renowned investor, he's a master of identifying companies that offer strong fundamentals, competitive advantages, and the potential for long-term growth. 1. Apple, AAPL. First on our list is Apple, which has become the crown jewel of Buffett's portfolio. As one of the largest technology companies in the world, Apple embodies Buffett's principle of investing in companies with strong brand loyalty and a robust ecosystem. With its innovative products, such as the iPhone, iPad, and Apple Watch, the company has a unique ability to generate substantial recurring revenue through services like Apple Music and iCloud. Buffett recognizes the durability of Apple's competitive edge, making it a cornerstone of his investment strategy. 1. Bank of America, BAC. Next up is Bank of America. Buffett has long been bullish on the financial sector, and Bank of America is a prime example of this strategy. The bank's strong balance sheet, extensive branch network, and focus on digital banking position it well for future growth. Buffett appreciates Bank of America's ability to generate consistent earnings and its resilience in economic downturns, making it a vital part of his financial sector investments. 1. Coca-Cola, KO. Coming in third is the iconic Coca-Cola. Buffett's love affair with Coca-Cola began decades ago, and it remains a significant holding in his portfolio. The brand's global reach, combined with its extensive distribution network, makes it a staple in the consumer goods sector. Buffett values Coca-Cola for its consistent dividend payments and strong cash flow, viewing it as a classic example of a company that has stood the test of time. 1. American Express, AXP. The fourth top holding is American Express. Buffett sees American Express as more than just a credit card company. It's a premium brand that has cultivated a loyal customer base. With its strong presence in the financial services sector, American Express continues to expand its offerings, from travel rewards to digital payment solutions. Buffett appreciates the company's competitive moat and its ability to adapt to changing consumer preferences, ensuring long-term profitability. 1. Chevron, CVX. Finally, we have Chevron. As one of the largest oil companies in the world, Chevron has become a critical component of Buffett's portfolio, especially as energy prices fluctuate. Buffett believes in the importance of energy companies as part of a diversified portfolio, and Chevron's focus on sustainable practices and its commitment to returning capital to shareholders through dividends align with his investment principles. In summary, Warren Buffett's top 5 holdings reflect his investment philosophy of selecting companies with strong fundamentals, competitive advantages, and the potential for long-term growth. Whether it's the technological prowess of Apple or the timelessness of Coca-Cola, each of these companies represents Buffett's belief in the power of enduring value. By focusing on these key investments, Buffett continues to demonstrate that patience and a solid understanding of market dynamics can lead to tremendous success. But what does the future hold for Berkshire Hathaway? Warren Buffett is 93 years old, and many wonder what will happen when he's no longer at the helm. The good news? Buffett has built a rock-solid company that's designed to outlast him. He's put in place a succession plan, and his team, led by Greg Abel and Ajit Jain, is ready to continue Berkshire's legacy. The diversified portfolio, cash reserves, and strong culture mean that Berkshire Hathaway is more than just Buffett. It's an institution built to thrive long after he's gone. In the end, Berkshire Hathaway is more than just a company. It's a masterclass in long-term thinking, smart investing, and building a business empire. From its humble beginnings as a failing textile company to its position today as a financial powerhouse, Berkshire has rewritten the rules of business. And the best part, the lessons from Berkshire's journey, patience, diversification, discipline, are ones we can all apply in our own lives. So whether you're an investor, entrepreneur, or just someone who loves a great business story, Berkshire Hathaway is a name worth remembering. Thanks for watching, and don't forget to like, subscribe, and hit the bell for more insights into the world of business and finance. And you, what do you think? Is Warren Buffett the best investor ever? Will someone ever be able to beat his performance and legacy? Tell us what you think in the comments.